This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live this Wednesday morning from the CNBC TV18 Motilal Oswal studios. I am Prashant, and as always with me, my colleagues Sonia and Nigel. Guys, hi, good morning.
Morning.
Hi, good morning. Lots of news flow coming through, but I think what is top of mind is the surge that we've seen in Brent crude prices, right? And that perhaps could be a bit of a headwind for the market. You never know.
Well, that's right. And Prashant, I think Surbhi was pointing this out. Your color of your tie normally, suggests things. So I don't know whether the bears will be pretty happy actually looking at the color of your tie if that's the case.
Is that how it goes these days?
It's for the last 3 days. Huh?
It worked. It worked. The green tie, greenish tinge.
You know what I'll do is after the break, before markets open, I'll run out, wear a green tie and come back.
I'll just
say that. Okay, well, let's just quickly run you through what you need to know as we begin another trading session. By the way, that exclusive that popped up, we'll sort of get to that in just a bit. But Nifty sort of continued its steady upward momentum. That's point number one, right? I mean, that is yesterday. And when I say, why is this important? Because Friday we saw that big rally. Monday there was a follow-up. And yesterday also, it was not as strong, but it was 0.25%. So it's steady, slow, steady, but it's moving up. And that is the Nifty. Mid-caps and small caps have had no problem so far. And that is a segment which, we'll discuss as we go along. But this is the large cap, the frontline indices. Now, yesterday, U.S. markets sort of came back. There was a 3-day sort of a weekend, but we traded yesterday. It was tepid. S&P was down 0.4%. The small cap index, that's the Russell 2000 in the U.S., that was down a full 2% or so. So that is kind of important to take note. It was more down than up, broadly. We've seen an impressive dollar rally, and the dollar basically moved up about 0.6%, and we actually hit about 104.85 at the high point. So actually, we're all nearing and knocking at the 105 kind of levels, right? So correspondingly, you can look at what's happening to Asian emerging currencies. I mean, the rupee, for example, has hit 83, I think, yesterday, right? So, on the currency side, a fair bit is happening. But I would say, and I would again say, and I said this last Friday morning as well, that looking at the data, I'm kind of surprised with the dollar strength. You actually had one of the Fed governors, and this is Waller, who's a Fed governor. He's a known hawk who came out and basically said this. He said that the recent data doesn't say we need to do anything imminent, which basically means that when the Fed will meet later this month, it most likely is a pause. This is a known hawk who'd like to hike, who's saying, well, we don't perhaps need to do very much from here on, at least in the very near term. But despite that, the dollar strengthened, yields moved up across 10-year, the 2-year, the 5-year, the 10-year, the 30-year. There was a bit of a pickup. I would like to wait and see a day or two more to see if this is just a technical kind of adjustment. There were some auctions in, treasury auctions in the U.S. This is with regards to that, or this is something else. But I was surprised. Oil prices, and we've been kind of pointing out that the real worry for a big importer like India is the price of oil, which is now at 90. For the last 3 days, I've been saying near 90, almost 90, but we are at 90 now. And this is the first time it's happened since November of 2022. We can go into details a little later. There was that sort of extension of production cut, Saudi Arabia, Russia, etc. But this is a very important variable. The market so far has ignored it, but I don't think for very long. If prices stay here, and this is not just a sort of a freak move, and it doesn't cool off quickly. Markets will sit up and take note, especially because of what, relative to the strength in the market, it doesn't square. Something's got to give. Now, on the Nifty, the daily upper Bollinger Band is 19,628. So that's the first level to take out. We closed at 19,574. If the market's headed higher, that's the first number to cross, and that's a logical kind of a target. Expect some selling pressure there. On the way up, above that, the 61.8% retracement of the entire decline, as we've been putting out, is 19,700. You cross 19,700. The all-time highs of 19,991, etc., come into focus. But that's for maybe if the uptrend kind of continues. But these are immediate near-term levels to watch out for. If you want to use a very near-term support levels, 19,430, perhaps the low from day before yesterday, perhaps comes into a focus on the Nifty. On the Bank Nifty, we are still looking for a decisive close above the 40-day exponential moving average. We closed above it, but only marginally. 44,517 is that number. We left off at 44,533, 532. On the Bank Nifty, on the way up, the index needs to close above the 44,660 level, a level we put out yesterday as well. And then after that, a very near-term support for the Bank Nifty comes in around, basically the lows of the last 2 days, 44,300 to 44,400 in that particular zone. The big support is 43,600, which the Bank Nifty did not break, while the Nifty did earlier. But that's slightly further away. These are near-term support levels you could look at. If the color, the texture, etc., still looks healthy, still looks supportive. The GIFT Nifty implied open will come up on your screen. But I will say don't go too aggressive. You've got three things working against you from the global screen. Equities were down. Yields are higher. Actually, four. Yields are higher. The dollar is knocking at 105. And oil prices are $90 a barrel. So given what the market has already done, especially in the broader side, perhaps, don't go all in or think, well, this is the start of something big on the upside or anything. Quite the contrary. Be cautious and choose what you want to do. And perhaps if you want to go in small and not big. That's not the time. At least this is not the time to do that. Sonia.
Well, absolutely. And, I'm on the other side of the fence.
Yeah.
I believe that this is overall still a positive market, and this is a market where you buy on dips. There's been so much buying from DIIs, from the domestic fraternity. But yes, in the very near term, you need to be cautious because of, A, what's happening with crude, and B, the kind of run-up that we've seen in the mid-cap end of the market, right? So there could be a little bit of caution over there. So on crude, as we know, that's the big question, right? Will surging crude prices play spoilsport for equities, at least in trade today? The Dow was down about 0.5% overnight. Crude is now at a 10-month high, and that's largely because Saudi Arabia and Russia both extended their supply cuts. It was a voluntary supply cut, and hence crude prices have moved up higher. And not just oil prices, but even yields are climbing. So all eyes will now be on the 19th and 20th of September on the US Fed meeting. Any indications of further rate hikes is something that the market will keenly watch out for. But for our own markets, I continue to be very bullish for a couple of reasons. One is that the Nifty has been holding on to the 19,500 mark with a lot of ease. And if you look at it from a larger viewpoint, we're just 2% away from that 52-week high. So we're just about 450 points away from that 19,990 mark, which was the all-time high. And hence, I believe that even if there is a dip, perhaps some buying could come through in the market. The bullish trend is something that you're seeing even with the flow situation. It's been 13 straight days now that DIIs have bought into the market. Yesterday, once again, 1,000 crores of buying. In fact, in the last 3 days in the cash markets, domestic institutions have bought almost 6,000 crores. And the space to be in undoubtedly is IT. In fact, the Nifty IT index is at a fresh 52-week high. A lot of stocks, HCL Tech, Cyient, Emphasis, etc., are sitting at fresh 52-week highs. So I'll watch out for the Nifty IT index. Maybe you could see some more buying there. But yes, purely for today, there are some headwinds in the market. It's important to see, and I believe that perhaps, these can be used as these dips can be used as buying opportunities.
Well, so even I'm tilting towards that direction, I think so. And the troika of factors are against equity markets. Whether you're talking about the highest US yields, you have the stronger dollar, as well as you have higher Brent crude prices as well. So the troika is against equities, but yet this market is pretty much a buy on dip market. And if you look at it, well, the uptrend is intact. The Nifty's uptrend is intact. We were approaching that resistance zone of around 19,650. The Nifty Bank, that plays out its weekly expiry. Yes, today is Wednesday, and things have changed from September itself. So today is the Nifty Bank weekly expiry that plays out. The question is it done with its underperformance? Because the bulls will be saying, hey, you haven't performed. If you look at the last 7 sessions odd, the Nifty is up 1.5%. The Nifty Bank has underperformed, but the IT index has been leading the way. So can the Nifty Bank come to the party finally? Can it give up its underperformance? If that's the case, then in fact we'll see a bigger run from here. But today's expiry, so particularly the second half of trade, will be a little bit volatile. Now, moving to the positioning of the FIs, well, they continue to remain net long on the index, 52% of their positions on the long side. But you need to keep an eye out on the net long positioning. At the start of the series, a few sessions ago, it was around 1,500 contracts. Now that number has moved to around 7,500 contracts. So they continue to build on the long positions. So they're expecting further upside from here on. However, in the near term, there was some call writing that we saw. 19,600 call, well, there was some open interest built up out there. The premium's around 41 rupees. So for those call writers, the resistance is perfectly in line with what we're talking about, 19,650. On the downside, the first reference point you're looking at is the 20 DMA. Moving to the Nifty Bank, since its expiry, well, we might as well look at the options data out there as well. The open interest moved up by close to around 17 lakh shares. The premium out there is around 91 rupees. So which tells us in the near term, the 50 DMA, around 44,800, that's a crucial resistance zone. While on the downside, the first reference point will be the 20 DMA. The GIFT Nifty suggesting a flattish start. The buy on dips, I think, continues, and you'll have to maintain a positive stance with the goal that maybe if you get stopped out, you get stopped out 80, 100 points lower. But on the upside, all eyes are on that 20,000 odd mark.
Okay, well, let's, what you need to know before we go any further, let's quickly tell you what's lined up here in the first half hour of the show. We get you updates from markets across the globe. Dean Kame of William O'Neill & Company will join in to discuss the global setup. Our research team will get you CNBC TV's list of top stocks for the day. At 8:30, we do a fundamental stock check with Devin Choksi of DR Choksi, beg your pardon. So that's what's coming up here in the next 30.
Okay, all right, let's begin the show now. We have plenty of cues to track. So very quickly, first we have a comment coming in from Amit Sachdeva of HSBC, who says that mid-caps have rallied hard. A key symptom of the bull market and analysis of cycles suggests that we are still midway. The mid-cap valuation premium at 34% is inching closer to the cycle peak of 40%, but the bullish phase in the broader markets can still last. He adds rising crude and food inflation are the near-term risks to watch out for. HSBC remains constructive on the overall Indian equity markets, which they believe will stay in a bullish phase, with any consolidation which is likely to be shallow and short-lived.
All right, well, let's get you some money market views now. This is Kunal Sodani of Shin and Bank, who says that the dollar index strengthened as the Eurozone producer price index and PMI data weakened more than expected, signaling a slowing economy. He says U.S. statistics, hawkish Fed comments favor softening landing concerns and fuel the U.S. dollar. He says higher Brent crude prices, depreciating Chinese yuan, and higher 10-year U.S. Treasury yields roll against the rupee. For the USD INR, Kunal says 82.8 to a dollar acts as a support, while 83.3 to a dollar is a resistance.
All right, and on the bonds, Neeraj Gambhir of Axis Bank says the 10-year benchmark bond yield traded in a narrow range of 7.15 to 7.21% last week. He says at the start of the last week, bond yields eased following lower U.S. Treasury yields on the back of lower GDP and jobs data. He also says the 10-year benchmark saw support around 7.15% on profit booking. However, he adds the U.S. Treasury yields hardened by the end of the week due to fiscal worries and bond supply, and consequently the 10-year benchmark rose to 7.21%. He expects the 10-year benchmark to trade in a range of 7.18 to 7.28% for this week.
Well, we have a lot of stock-specific action to track for you. We get to that in just a bit in our special Top 10 segment. We're looking at Vedanta, Bikaji, Safari, Tata Power, NBCC, Power Grid, Voltas, ONGC, Oil India, and Bharat Forge. Well, all of them expected to open up in the green, so no stocks expected in the top 10 segment to react negatively.